Governments impose taxes for a variety of reasons, primarily to fund public services and infrastructure, but also for broader economic and social purposes. Here are the key reasons in detail. 1. Revenue generation. The primary reason for imposing taxes is to generate revenue for the government. This revenue is used to fund essential public services and infrastructure projects, including healthcare, funding for public hospitals, clinics, and health programs; education, support for public schools, universities, and educational initiatives; defense and security, maintenance of armed forces, police, and emergency services; public infrastructure, construction and maintenance of roads, bridges, public transport, and utilities; social services, support for welfare programs, unemployment benefits, and pensions. 2. Redistribution of wealth. Taxes are used to redistribute wealth within a society, aiming to reduce economic inequalities. This is often achieved through progressive taxation, where higher earners pay a larger percentage of their income in taxes compared to lower earners. This revenue is then used to fund social programs and services that benefit lower-income individuals. 3. Economic stabilization. Governments use taxes as a tool for economic stabilization. During periods of economic boom, higher taxes can help cool down an overheated economy by reducing disposable income and thus slowing down consumer spending. Conversely, during economic downturns, tax cuts can stimulate spending and investment by increasing disposable income. 4. Resource allocation. Taxes can influence the allocation of resources within an economy. By imposing higher taxes on certain goods and services, the government can discourage their consumption or production. For example, high taxes on tobacco and alcohol aim to reduce their use. Similarly, tax incentives can encourage investment in desired areas, such as renewable energy or research and development. 5. Behavior modification. Taxes are used as a tool for social engineering to influence behavior. This is evident in the use of sin taxes on products like cigarettes and alcohol to reduce their consumption. Environmental taxes, such as carbon taxes, aim to reduce pollution and encourage the use of greener technologies. 6. Provision of public goods. Certain goods and services, known as public goods, are typically not provided by the private market due to their non-excludable and non-rivalrous nature. Examples include national defense, public parks, and street lighting. Taxes provide the necessary funding to supply these public goods, which benefit society as a whole. 7. Debt servicing. Governments often borrow money to finance large projects or to cover budget deficits. Taxes are a critical source of revenue to service this debt by paying interest and principal repayments, thus maintaining the government's creditworthiness and financial stability. 8. Supporting local governments. In many countries, local governments rely on tax revenues to provide region-specific services, such as local infrastructure, policing, and community programs. National governments often collect and redistribute taxes to ensure that local governments have sufficient funds. 9. Encouraging economic growth. Through targeted tax policies, governments can encourage economic growth. For instance, tax credits for businesses that invest in new technologies or expand their operations can lead to job creation and increased economic activity. 10. Funding research and innovation. Tax revenues can be directed towards funding research and development initiatives, which are crucial for technological advancement and maintaining a competitive edge in the global market. Grants, subsidies, and tax incentives can support innovation and scientific research. 11. Supporting international obligations. Governments also impose taxes to fulfill international obligations, such as contributions to international organizations, e.g. United Nations, or funding international aid programs aimed at alleviating global poverty and supporting development in less developed countries. 12. Promoting social welfare and equity. Taxes are used to fund programs that promote social welfare and equity, such as healthcare, education, and social security. By providing these services, the government ensures a basic standard of living and promotes social cohesion. 13. Environmental protection. Environmental taxes, such as carbon taxes and taxes on plastic bags, are used to reduce environmental harm and promote sustainable practices. These taxes aim to internalize the environmental costs of certain activities, encouraging businesses and individuals to adopt more environmentally friendly behaviors. In summary, governments impose taxes not only to fund their operations, but also to achieve a wide range of economic, social, and environmental objectives. Through careful design and implementation of tax policies, governments aim to create a balanced and thriving society.